Tesla, TSLA stock. Is it gonna moon with GameStop, GME, meme stocks? Or is it about to rotate out, crash, and underperform with the big tech and the growth as we do our sector rotation here coming up the front side of this everything bubble? That's what's up. We're gonna do the charts and the technical analysis, do some macro. This is Brian Lewis with MMT Investing. Smash the like, share, comment, subscribe, and notifications to help me out. So here's Tesla. All right, so Tesla has done a weird looking maybe topping pattern and pulled back a bit. And now are we going to do like a slingshot up here? Because this is a really strong bounce here. Or are we going to follow these bear market lines down? So this is what I'm looking at today. And I guess I'll just give away my position first, and then I can go look at all the charts, review the S&P and that sort of thing. But what I did yesterday at resistance here is I opened an out of the money put. It's like a May 450 strike, which is mean. That's a really mean put strike. But this is our support here, and we've gotten support from this purple line here, and we've been barely able to stab at the red line so far because purple's holding us up, and now we're past purple, it's gone. So now we can stab at and through the red line and potentially get down to like 420 support here. That's what I'm looking at right now on Tesla. That's my position. It's a pretty aggressive put. It's not a big position, but that's what I think is happening. And let me look at the market and show you. And this is also ridiculous because like we're just getting the stimulus checks pumped out, and everyone's like super thinking stimulus checks are gonna like pump the stock market up. But what the stimulus checks have been doing is driving inflation and interest rates up, which usually is really bad for the stock market. So I don't know. Everyone like always has a story, and it's generally not helpful because the story, when it's opposite to what the chart is doing, makes people do some mistakes. Anyway, this is the S&P. We've had this rising wedge. I did a big video on the rising wedge yesterday, and you can see we're underneath our bull channel now. So just on the bull channel, we had a attempted breakdown here that failed. Then we stabbed through, and now we're getting solid support on this purple line. No coils underneath. We did get a little mini breakout on top, which is cool. That could predict a big up move later. But then we're coming down here and we're coiling under this red line, under the red line. So this red line looks like it's bad now. And the yellow line, we've coiled under it, hard rejected off of it, hard rejection, hard rejection. Like that looks pretty bad. It looks like we're stuck under this bull channel and we're not getting back into me right now. And rising wedges also often fall to the bottom of the wedge like fast. Like they'll crash right to the bottom of the wedge and sometimes fall through there. So this just looks like a really mean rejection. And there's some other macro stuff going on, like some divergence and things like that on the RSI that don't look that good. But just on the chart, this is a big rejection area where the upside of going long is pretty small. Like if it does go up, it's just going to probably get up in the bull channel and try to find support, and it's pretty weak. And if it goes down, it's going to go way down. So that is kind of the look. It's sort of like on the S&P, just sort of a asymmetrical kind of downside right now, just because we're at resistance here. But if you take a look at the Qs, you can see the S&P is kind of been bouncing kind of sideways and up. But if you look at the Qs, this is like big tech and growth. It has just been drooping. It's been bouncing downhill, and it definitely didn't make it back to all-time highs. So the Qs are sort of leading this down move. And this is sort of a classic sector rotation thing where like the bonds will rotate out first, and then like the big tech and growth will rotate out. And then you take the rest of the stocks sort of to the top of the market. So I think we're still on the front side of the everything bubble here, but this looks like the Qs are leading, big tech and growth are leading this move down, and it looks like we're getting a pullback here. So, but better than shorting the Qs, there's a little fund that I like to call ARK Invest, which is even weaker than the Qs. So this is like a popularity-based fund where people like pile in on the way up, and then when they're piling out on pullbacks, you get an exaggerated down move that's even worse than the Qs. So this is my major short position. This is the big short position I opened yesterday. I have resistance here. I did the video on that yesterday. But Tesla, well, the chart looks very similar, right? But Tesla's not the Qs. Tesla's this crazy meme stock, right? So the question here is Tesla going to do some kind of slingshot bounce here? Because this topping pattern doesn't look that awful. It's pretty meager and sideways topping pattern. So it really wouldn't surprise me to see Tesla freaking slingshot. But it looks like to me that Tesla is following the big tech stocks down in this sector rotation. And so that's my position on Tesla right now. It's not, like I said, not a very big position. But that's what I'm looking at right now. And, this chart is looking nothing like any of these meme stocks. They're on these kind of bullish flagging kind of patterns. Like GME and AMC, they're on these bull line flagging and stuff. Like Tesla is not doing that at all. So yeah, anyway, I'm short Tesla. And then the idea after this pullback, there's kind of two sectors that are still interesting to me to go long after the pullback, after the sector rotation. And it won't be Qs and big tech. I won't be touching them again on the long side at all. But what I'm looking at here is IWMs have been strong and stronger than the S&P in general on these couple of chop pullbacks. And I mean, IWMs have had a super bullish chart for a long time now. But if they're not pulling back on these pullbacks very far, the upside is going to be pretty good on them. And this is kind of the generic stock group that's not big tech and growth. It's like the Russell 2000, mid caps, and small cap stocks. And so I think I like those to the top of the bubble. But the sector that's rotating in now, if tech is rotating out, is going to be base materials, minerals, metals, commodities, and miners. And so FCX has been the momentum leader on this sector, and they're all miners and minerals and materials. And they have been just bulling since the corona, but they have a similar pullback pattern to IWM, where it looks pretty strong. It looks even stronger, and it's less droopy than the IWM chart. So when and if we do get down to a support point where I'm trying to go long, this is going to be my number one. FCX is going to be my main stock. And then there's going to be some other stocks like Load or AG that are kind of minerals and miners that I think can bull pretty hard, that people aren't really watching too closely. Everyone's like watching these meme stocks, and they're doing cool stuff right now. But after this rotation, I'm not really sure where the meme stocks are going to be, but I do think that the smaller kind of miners and things like that could be something cool to watch. So what's Bitcoin doing? Bitcoin, so Bitcoin, yeah, Bitcoin, here, let me look at Bitcoin. I think I figured out what Bitcoin's doing, because, I mean, it's wobbling and whatever, but we picked up a real bull market, and this is a logarithmic bull market line, so it's, well, not exponential, but it's logarithmic. And you can see, like, this goes from 10 to 30, and this goes to 60 this little bit. So, like, it's going up more than it looks like it is. But, like, when we were picking up this trend line early, the stock market was chopping and doing weird stuff, and Bitcoin didn't care about it at all. But these pullbacks that we had here were related to market pullbacks. So it looks like Bitcoin is starting to care what the market is doing, which makes me, well, and also we just got on top. See, the last time we got on top of support, we did a big moonshot, but this time we did an over-under coil, which doesn't look very good. And we definitely didn't do a moonshot here. But so if the market is pulling back, that makes me not want to touch Bitcoin until the bottom. And so probably Bitcoin as well. I think I like Bitcoin and FCX. are going to be my two favorite, and then IWM is probably my third as just a generic kind of long play. But yeah, FCX is Freeport McMoran mining, and they do minerals and metal mining. And so, yeah, that's kind of the look at the market. Let me look at the bonds. So what I was saying on the sector rotation is kind of when you're getting near the top of the bubble, like the bonds, it's just like the credit cycle and the expansion and the bubbling nature. Like bonds and big tech will bubble together, they'll bull together. And bonds have been bulling longer than big tech. They come in earlier and they rotate out earlier. So, I mean, this is the big rotation out of bonds that started last year. And now bonds are getting even worse. And now it looks like the Qs are leading the market down. So it looks like we rotated out of bonds. Now we're rotating out of growth and big tech. And then the next thing that would probably rotate out would just be like the generic stock market, like the IWMs, the sort of the remaining sectors of stocks that aren't related to big tech and growth would make it to the top of the bubble and start rotating out. And then after that, the miners and minerals and stuff should hold up better, but once you get on the backside of the bubble, everything crashes together. So it gets kind of dangerous. But I think we're still going up the front of the bubble. And that kind of sector rotation tells me we're still going up the front of the bubble, because you'll rotate out of the bonds, then you'll rotate out of the tech and growth, and then you'll go to the top of the bubble. So, like I'm looking at up here as sort of the top of the bubble area, like 43-ish, something like that. Might push 44 and do some weird stuff. But we have multiple sets of downward chopping bear market lines that are set up now. We're breaking down. We're breaking down out of our long-term bull channel since 2008, which is this big bull channel. And we've never made an attempt to get out of the top of this thing. And this little bull channel, we did make a little attempt to get out of the top of that. So I think we might get out of the top of it before we get to the top of the bubble. We might get out of the top of this little bull channel here. But yeah, that's kind of the look here. But I think we're going to come and try to come back to support here and see what kind of reactions we get on the support in the big bull channel. That's what I think we're going to do now. And I think we're going to rotate out of tech down to here. And then tech is going to be a trailing sector for the rest of the bubble. And it'll be like IWMs and miners and minerals to the top. That's what I think is going to happen. Yeah, let's see. What's the dollar doing? The dollar is kind of important. I like to look at the dollar versus the yen because it can lead. And you can see that it's doing a big breakout. The dollar is doing a huge breakout of a channel. Like this is a monstrous like channel breakout. That's a huge strong dollar indicator to me. Meanwhile, the DXY is just barely trying to bottom and reverse, and it's not really clear that it's like a strong dollar, but it looks to me like it's picking up a bullish trend line. It doesn't necessarily look like it's like blowing up. But if you look at this pattern back here, kind of before we bottomed, we did like tap and false kind of breakout to the top of the channel, and we did a big down move here to the support. See, and we went right back up to where we came down from. Big red candle, big green candle, right? So that wouldn't surprise me to see us go green candle to like 94, something like that, like real fast. And then something like this, like then we can kind of chop sideways. But a vertical green candle at the same time as a pullback in the market would be super bearish. Like a vertical green candle on the dollar, like on the DXY, is not good for the stock market. Yeah, and like I was saying, the stimulus checks. Like everyone thinks like the Fed printing some bank reserves or the Treasury doing stimulus checks is going to float the stock market, but really they're just causing interest rates to rise, and they're causing inflation with that stuff, which is generally not a good thing. I can look at that. I can look at the 10 years. So take the log off. Go big. Here you go. All right, let's go to monthly. Is that way too big? Probably. Yeah, that's fine. So the interest rates, this is the 10-year minus the 2-year treasury bond rates. So this is where the bonds are trading, and this indicates what the market thinks interest rates are going. So this means that market thinks interest rates are going up right now. The Fed is still saying interest rates are by around 0, and this is saying no, we're like pushing the long end up. You know, it's around 2% or something right now. It's higher than 0. So it doesn't. Well, this chart doesn't tell you where the interest rates are. It just tells you which direction the interest rate cycle is headed in the short term. But if you just look at like the, say like the 30-year on its own, I mean, you can see, well, since the 70s, we have been in a bearish kind of a, you know, it's been a deflationary decrease in interest rates since the 70s. Like interest rates were like almost 20% in the 70s, and they went to 0. Well, not on the long end of the curve. The long end didn't quite get to 0. It got close. So maybe this is a bottoming pattern. Maybe this is the end of the deflationary cycle and we start inflationary cycles. But I mean, we'll go up and down on the way up as well. So right now we're just in the middle of an up push. But the question is if, and this is pretty good, like this is a slingshot, it looks like a double bottom, like that could be a bottoming pattern. But I don't know if that's good, but it could be a reversal pattern where we start going into actual inflation for a while, like 10 or 20 years or something. But right now we're just making an up move across a freaking 50-year down channel. And, you know, next year we'll kind of be topping that the up move, and then the next time down, which could be 3 or 4 years from now, do we land up or do we land lower? If we land lower, then we're headed for negative interest rates, and it's a deflationary environment, and this thing's continuing. And these charts don't really tell you where you're going to land next. It just says we're on a little up move across this 50-year down channel. So that's going to be important, I think, later. On the backside of the bubble, it's going to be really important. Because if we're going deflation and negative interest rates on the backside of the bubble, it will be a very ugly downward bear market. If we're switching into inflation on the backside of the peak, then that'll be holding the stock market up. But we can worry about that stuff later. That's Tesla. Let me see what oil is doing. Oh, let me log it. Oil, that oil crash. The oil crash looks absolutely ridiculous when you turn on the log chart, because it's like exponential thing down that's just like beyond reality. Those future contracts traded negative. It makes the chart look ridiculous. But since 2008, we've been in a down channel on oil. We did pick up support, I think, here. So did we bounce off support? Are we going to break out of this channel, or are we going to come back in the channel in here in between kind of support and resistance out here? That's like 2027, 2028 or something. Are we going to be at like $23 a barrel in 2028 back inside here? Or are we going to like bust out of here? I don't know, moonshot from here or pull back to support? I don't know. But the last few times we've broken out of this down channel, we have come back inside the channel and sometimes crashed all the way across it. So this to me is a dangerous spot for oil. And oil is sort of inverse to the dollar. So basically a vertical strong dollar move, like every time we've had a strong dollar reversal, these are the strong dollar reversals. Like that's our first strong dollar reversal, second one, third one. I can go back, fourth one. The COVID crash was not a strong dollar reversal. It was just like a weird wobbly thing. But I'll show you, look at the dates, 08, 11, 14, 18. Right, let me go back to the DXY and show you. Look, 08, 11, 14, 18. Boom, 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 boom. Every time we've had a strong dollar reversal, oil has freaking crashed. And right now oil is sticking its head up out of the channel, and it looks like we're getting a strong dollar reversal. So I am not bullish on oil, although it's super weird, and maybe we're switching into inflation, maybe we're getting to the top of the bubble. Like, that pattern could change, but none of that looks good to me. And let me get into a smaller chart and see what it looks like actually right now. Like 15-minute chart. It looks bad. Okay, so not terrible, but not great. Let's do hours. So, I mean, we've been bulling up out of the down channel here pretty strong. And every time we flag, we pop, flag, pop. But this one, I'm not sure if we're on a flag or not here. I mean, I was looking at like something like this, and now it's pulling down under. Man, that might be a flaggy area. So, I mean, if we flag out on that trend line, if we keep flagging sideways, that'll probably be a bullish thing. We might pop back up. But yeah, that combination of a strong dollar breakout and an oil breakdown would be bad for the markets. The oil is getting weird. I don't know. Let's do some silver and stuff. Got to go to bigger charts for these. So silver, I mean, silver did a huge flag, and now it's pretty much wobbling around the 24-ish area. These are huge coils, and it's just a big sideways flag. We get a flag pull here. So this looks like a really mean bullish kind of breakout to me, but these flags need to pick up a trend line that's going up. So this is the kind of silver squeeze idea, but I don't know that we have picked up support. Like, maybe this is support. Like, if silver starts jumping up like a line like this out the top of this thing, like, silver is going to be taking off. So this, right, but just today, like, it's not doing that. I don't think. It's just kind of flagging sideways still. It's a big slow flag. So it's neutral today, but this is a bullish flag until we pick up a trend line. So I'm bullish on silver, especially to the top of the bubble, because we got inflation and we're switching into commodities, which is like the perfect combination for silver, just for the next few months probably. Maybe on the pullback, silver will like pick up that rocket trend line if we pull back here. Gold is just weak. Like, gold probably will hold up really well on the back side of the bubble, but right now it's just whatever. Nothing exciting. There's a lot of other things, like, you know, platinum is breaking out of its big down channel. Like, copper, even meaner. Like, copper's really ripping hard out of its down channel. So this is commodity breakouts. So it looks like we're rotating into commodities, like I was saying. But also looks like we're not quite to the top of the bubble. Like, these start bulling before you get to the top of the stock market bubble, and that's what's happening. So that all looks normal. It looks like we're still on the front of the bubble. So short positions on the front of the bubble are dangerous. So I'm saying I'm shorting, you know, Tesla and ARK right now. But that's really short-term, dangerous, short position before we like slingshot upwards. And that's what I'm looking at. And this is not investment advice as usual. Just smooth brain entertainment scenarios. I don't know, memes. I don't know. None of these like tech memes look good. It's all these like BlackBerry and stuff that are looking interesting. The BlackBerry chart, I can't really figure out what it's doing. Maybe it's picking up another flag thing here. But you can see the meme charts are just kind of flagging up, and who knows how many times you can flag up. 2, 3, 4, 5, 20 times before it just busts down and crashes. But right now it looks like they're flagging. Like Express is doing it, BlackBerry is doing it. What's this, Tanger Outlets? Not so much. This one's just, it's bullying a little bit, but it's not flagging like crazy. Koss is a cool one. There's no like call options on Koss, but man, this thing went from 3 to 135 in one single up move. That's insane. That's absolutely freaking insane. That's definitely the biggest mover of any of the bubble stocks. but you can't do call options. And it looks like, well, my lines are screwed up. Oh, because I'm on dailies. Yeah, the logarithmic trend lines, it really matters which time scale you're on when you draw them. But yeah, like Koss looks like, well, it looks like it might be doing it right now. Maybe I should do a Koss video. Yeah, and Koss might be doing it right now. Okay, so yeah, you can see flag, flag, flag. It's just kind of flagging up this trend line. This is a crazy volatile one. 3 to 178. That would be insane if you could do call options on that thing, but it doesn't have them. Yeah, similar. Flagging, flagging, flagging. Like a bunch of these meme stocks are flagging like this. This chart is a little droopier. It likes this downside down here. This is Naked Brands. And then, whatever. I don't know. That's kind of a look at the meme stocks. They're flagging. They look cool. But I expect like these miners and minerals, these are starting to flag. And that's something that'll carry you to the top of the bubble and past it probably. So like LODE looks pretty cool. And I think I have a little call option on this one right now. I can't remember. And then AG is the silver miners, which are hard to figure out what they're doing. It might be picking up. It might be picking up in here in 16 area, and then if it does that, then it would start a flag. But we have a super long-term consolidation on the silver miners, and we did a false top and then blew out of the top. And so this, like silver looks like it's setting up to be pretty cool. Oil looks dangerous. Silver looks pretty cool. Gold looks weak. Meme stocks are still blowing up. Tech looks like it's gonna freaking crash. Bitcoin, yeah. Bitcoin, who knows, man? Who knows? But Bitcoin does seem exposed to market pullbacks now. These pullbacks on Bitcoin, like these flag backs, have been on market pullbacks. It like gets hot, and then when the market gets in trouble, Bitcoin comes back to support and through it usually. And so we did that on this last pullback. And now we're under support, and if we pull back, I don't know where we pull back to. We're already under support and about to pull back again, is what it looks like. I mean, Bitcoin could come down. Bitcoin could do a mean stab, actually, and come down back to 40 or somewhere. Or even try to stab. I don't know. I think it has more to do with, like, the timing. Wherever Bitcoin is, kind of when the market's bottoming is probably a good spot to look at a long entry. Oh yeah, I was on Ledger X. They have Bitcoin call options on Ledger X. I'm thinking about doing that. I haven't put any money in there yet, but I'm in America, and that looks like a good spot to do a Bitcoin call option. And so if Bitcoin does do, if the market does pull back and Bitcoin does like a mean pullback, like a little vertical slingshot kind of pullback, like a call option would be so mean. Like it could, like if Bitcoin did like a vertical pullback to like 40, it would just like slingshot straight up to 80. Like you could do a call and then whatever, just ride it. And so yeah, like I was saying, these are logarithmic scales. So I mean, we are picking it up at around 10, and you can see this flag's at 30. This flag's at 50, and as you just go a little bit farther up, like we're at 100, you know, if we go to twice as far as we are now, it's the 150 area, and it gets pretty quick into 200s. So I mean, I think we're like halfway up this Bitcoin bubble based on the 4-year cycle. So, you know, like time-wise, if you go out here, like that's getting to like 250 or something on Bitcoin, like that wouldn't surprise me at all. Like if we're still on this trend line out here in July, like it's 250 is where this trend line is. That's insane, but that's what it looks like. That's the line. So that's what it is. All right, cool. Yep. I think that'll do. Cheers.